Technology has taken over the world by storm, and with it comes a whole new world of opportunities for investors. Tech stocks have been known to be some of the most lucrative investments for years, and the trend doesn't seem to be slowing down anytime soon. Hey, welcome to Stock Market Mate. In this video, we'll discuss two top tech stocks with incredibly strong cash flows that are poised for growth in the coming years. So whether you're a seasoned investor or just starting out, be sure to stick around and learn how you can potentially profit from these tech stocks. Who knows, maybe this can kickstart your way into being the next billionaire. However, before we start, give us a like and subscribe to the channel while you're at it. If you're done with that, then let's get into it. Investing in tech stocks can be exciting, as it is an industry that is constantly evolving and changing, creating new opportunities for growth and profit. The rise of innovative technology has revolutionized the way we live and work, from smartphones and social media to cloud computing and artificial intelligence. As such, investing in tech companies allow investors to tap into the potential of new technologies and ride the wave of innovation. One of the main attractions of tech stocks is their potential for exponential growth. Unlike traditional industries, where growth is often slow and steady, tech companies have the ability to scale up rapidly due to the nature of their products and services. The rapid growth of companies like Apple, Amazon, and Google over the years is a testament to this, would have yielded tremendous returns for investors. Moreover, tech companies often have high profit margins due to their innovative products and services, creating the potential for significant cash flows. This allows tech companies to reinvest in their business, further driving growth and creating more value for investors. Additionally, many tech companies have global reach, which means investors can benefit from the increasing demand for their products and services worldwide. Overall, tech stocks offer investors the potential for high growth, strong cash flows, innovative products and services, and competitive advantage. It's no surprise that investors are drawn to this dynamic and exciting industry, especially now that the American economy is facing multiple difficulties, including escalating inflation, mounting interest rates, and deteriorating forecasts of S&P 500 earnings. In an inflationary economic environment, it makes sense for retail investors to invest money in the stock market instead of parking it in cash. However, investors should also focus on picking fundamentally strong stocks with robust cash flows that are capable of withstanding the current recessionary pressures. Cash flows enable a company to fund its operations and growth initiatives without resorting to expensive debt. Additionally, cash flows can be returned to shareholders as dividends or share repurchases. However, which stocks are your best bets in this volatile time? Well, it's none other than Nvidia and Microsoft. Nvidia is a leading player in the growing and high-demand GPU or graphics processing unit or market, which is used in gaming, artificial intelligence, and data center applications. It also has a strong competitive advantage due to its proprietary technologies and intellectual property, which are difficult for competitors to replicate. The company has consistently delivered strong financial performance with a track record of revenue and earnings growth. In addition, Nvidia has a robust balance sheet, with significant cash reserves that provide financial flexibility for investments and acquisitions. Nvidia's free cash flow was $3.8 billion by the end of fiscal 2023, which concluded on January 31, 2023. This figure was lower than the $8 billion recorded in fiscal 2022 due to the impact of weak PC and data center markets. However, the free cash flow is expected to increase in the future with a surge in AI chip sales. Nvidia's graphics processing units, or GPUs, which are predominantly used for high-end video gaming and data center segments, are significant in the current AI revolution. Nvidia is considered one of the primary AI chip suppliers used to train the popular ChatGPT language learning model. It's predicted that to implement ChatGPT commercially, more than 30% of Nvidia's A100 GPUs may be necessary. Nvidia has introduced its latest high-end data center GPU, the H100 chip, to sustain its lead in technology. The H100 chip is reportedly 4.5 times faster than the A100 chip. Nvidia has a dominant position in the discrete GPU market, which is over 80%, and the enterprise GPU market, which is over 90%. Higher pricing for AI GPUs is expected to benefit Nvidia, as they are priced 10 to 20 times higher than gaming GPUs. Once the macroeconomic conditions stabilize, the company is expected to experience a surge in chip demand in areas such as cloud computing, automotive, gaming, and high-end PCs. Despite Nvidia's high valuation of nearly 151 times earnings, the company is committed to returning value to shareholders, as seen by the $398 million in dividends paid and $10 billion of shares repurchased in fiscal 2023. With $7.2 billion remaining on its current authorization, Nvidia may be a wise investment choice. Microsoft Microsoft is a well-established and highly profitable company that has consistently delivered strong financial results. The company has been investing heavily in its cloud computing segment, Azure, which has been growing at a rapid pace and is expected to continue driving Microsoft's growth in the future. Moreover, Microsoft has a strong balance sheet with significant cash reserves and generates a large amount of free cash flow, which it has been using to return value to shareholders through share buybacks and dividend payments. In the 12 months leading up to the third quarter of its fiscal year 2023, Microsoft, a massive technology company, produced $57.4 billion in free cash flow and distributed $41.5 billion to investors through dividends and stock repurchases. The company's stock is currently trading close to its record highs, largely due to its partnership with OpenAI, the firm responsible for the immensely popular ChatGPT chatbot, which has attracted around 100 million active users. According to reports, Microsoft has invested $3 billion in OpenAI since 2019 and is said to be considering an additional investment of $10 billion in exchange for a 49% stake in the company. Microsoft's Bing search engine, powered by ChatGPT, is becoming a strong rival to Google's search engine and is gaining market share. Samsung is reportedly contemplating replacing Google with Bing as the default search engine for its devices, potentially leading to a surge in advertising revenue for Microsoft. The growing popularity of generative AI technology is driving demand for high-performance computing power to train large language models, and enterprises are increasingly adopting AI-led applications, which could fuel growth for Microsoft's Azure cloud. The company has launched Azure OpenAI Service to enable its customers to leverage large language models for various enterprise applications. Microsoft's latest quarter exceeded market expectations in terms of revenue and earnings, although the current economic conditions may still pose some challenges for Microsoft's short-term prospects. The company's medium growth outlook appears promising. Additionally, Microsoft is highly profitable and generates significant amounts of free cash flow. Taking these factors into account, long-term investors may find it worthwhile to invest in Microsoft shares. And there you have it, the two great tech stocks with immensely strong cash flows. Before you invest in these stocks, it's important to note that investing in anything comes with risks, and the aforementioned stock prices may be impacted by various factors such as macroeconomic conditions, competition, and changes in technology trends. It is recommended to conduct thorough research and analysis and consider your personal financial goals and risk tolerance. Consulting with a financial advisor may also be helpful. We hope you found this information helpful in your investment decisions, and subscribe to our channel for more investment insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching, and we'll see you on the next one. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!